Good morning everybody and welcome to Rational Thinking. My name is Joshua and today is Monday the 30th of July. As always, we'll be covering all of last week's news and also what we can see and expect for the week ahead in regards to the pound, the dollar and the euro. So to start with the pound actually had quite a quiet week on the data front, but what we lacked for on data we made up in activity on the Brexit front. We had Jeremy Hunt, the new Foreign Secretary, fly over to Berlin to meet his counterpart, from which he made it clear that a no Brexit deal would only benefit both Donald Trump and President Putin. Theresa May also chose last week to announce that she herself will be taking leadership of the Brexit negotiations. However, on Thursday, Michel Barnier effectively tore up and shot down her trade proposal, which doesn't bode well for the first round of negotiation that she looked after herself. In regards to the euro last week, we had the ECB meeting. Now markets were very much expecting a tightening of the interest rate or even the monetary policy and a tapering of QE in terms of forward guidance. However, Mario Draghi very much under-delivered on that, saying that the QE program will stay exactly how it is due to finish at the end of this year, and that interest rates were going to stay at their all-time low until summer 2019. Now, this disappointment in what markets were expecting definitely caused the euro to fall off somewhat, and markets are still going to be expecting, some forward guidance elsewhere if there could be some upside to lift the eurozone economy, or if the economy is performing substantially well enough to see if anything can be done sooner rather than what was previously outlined. In regards to the dollar last week, there was a bit of data out. Most importantly, we had GDP figures on Friday, which was actually printed very, very positively at 4.1%. This piece of data, in fact, was the strongest estimate since Q3 2014, and really sort of reinforces how strongly the US economy is performing. Now, if you take that into consideration with the tax reforms that Donald Trump has managed to get through, whereby we could see an extra $1.5 trillion in the way of a tax boost from companies bringing revenues back to the US. Naturally, this is going to increase government spending, and what all of this really means is that it really creates a very, very strong case for a US rate hike. Naturally, we've got the US Federal Reserve meeting this week in regards to what a potential rate hike may look like. So for the pound this week, we have the big one, the Super Thursday meeting. Investors are pricing in a 90% chance of a 25 basis point rate hike, pushing the interest rate in the UK here to 0.75%. However, the rate of insolvency or companies filing for insolvency is at a 6-year high in the UK. And with Brexit still a massive unknown, it's going to be very interesting to see how both Mark Carney and the MPC members vote for the potential rate hike, or if we do actually see this rate hike, and how that then impacts ongoing Brexit negotiations and growth here in the UK. So this week on Wednesday we have the FOMC statement. Now, as previously discussed, we've had a whole bunch of strong data which has really paved the way for a US rate hike. Although we're not actually expecting a rate hike at this time, from its current 2% level, market participants are definitely going to be looking to see what factors are going to be decided on for this rate hike, if not when the next rate hike will be. Most importantly this week, outside of that, is that we've got the US unemployment figures on Friday. We all know how concerned the US are with both inflation and their jobs market, so it'll be very interesting to see how that data is printed and how that then feeds into potential rate hike sentiment. Right guys, that's all from me for this week. As always, if you've got any questions or any other currency pairs that we haven't covered, please feel free to reach out to us on the email provided. But by all means, please like, please subscribe, and we look forward to you guys joining us next week. Thank you.